Hi, I'm Nam Ngo. In this video, I will talk about my work on practical witness key agreement for blockchain-based dark pools financial trading. This is my joint work with my other colleagues, Fabio Massacci, Florian Kerschbaum, and Julian Williams. As we know, there are two types of markets, public auctions and private auctions market. The essential difference here is basically the publicity of the order book. Dark pools are classified as private auctions, where there is no public limit order book, as in a dark pool, orders are only conditionally visible. The reason why we need dark pool is that a large order arriving publicly may shift the market price in an unfavorable direction to the market owner. This is called front running. So, dark pools have to hide the order information and only disclose them to the traders that can match those large orders. Typically, in a dark pool, there are fewer orders, but are mostly of much larger volume. Bloomberg Tradebook is an example of a centralized dark pool, and of course, such centralized dark pool is also a central point of attack and vulnerable to insider threats. Therefore, an interesting question to ask would be, is it possible to have a distributed dark pool so we can avoid the central point of attack? We could use a blockchain-based solution here. Now, for distributed financial systems, the first technique that comes to mind is usually generic multi-party computation, but that won't scale, as studied in a previous work on public auctions called FuturesMax published in Auckland 18. And other existing techniques like witness encryption or zero-knowledge proof might not work either for functionality or efficiency reasons. Basically, for a blockchain-based dark pool to work, we need to satisfy two requirements. In a dark pool, the investor only wants to disclose the order to suitable traders. For example, the traders that have enough cash, or they can accept to trade in a certain price range. This can be modeled as an arithmetic relation R of the trader's financial information. At the same time, the traders do not want to disclose their financial information, but only want to show that they are suitable. Here, we can leverage existing blockchain-based financial systems like Zero Cash or FuturesMax, where there are already some committed financial information. In this case, a trader's commitment becomes an instant file of relation R, and the trader's financial information is the witness omega to phi of R. Here we can see the formal form of some interesting criteria to use in a dark pool. For example, the sufficient capacity or the price range relation. They basically capture the conditions such as the trader's cash is above a threshold or their offers are within an acceptable price range to the investor. You can find more details on those relations in the paper. There are several solutions available, but they are all with some issues. A trader can use zero-knowledge proof to prove his suitability and send along a public key. But the man-in-the-middle attacker can replace the public key easily. A trader can also use signature of knowledge to sign the public key to overcome the man-in-the-middle attack. But this provides only one-way communication, as the investor now knows the public key of the trader for secure messaging. But the trader cannot send secure message to the investor. A trader can also use witness encryption, in which the order can be encrypted with the required relation. But unfortunately, witness encryption is impractical for general NP relation, and practical witness encryption scheme only supports arithmetic relation of multiplicative depth of 1. Another possible tool to use is authenticated key exchange, but it also supports only algebraic relations. As mentioned before, an important issue to consider in a blockchain-based key agreement solution is to handle compositional attack such as the man-in-the-middle attack. In a normal execution of a distributed dark pool, The investor, in order to find suitable traders for his order, could publish a challenge on the blockchain in the form of an arithmetic relation R. The suitable traders can show that they satisfy the required conditions by sending back a valid response that is generated using a secret witness omega, whose instance is a committed financial information file on a blockchain that satisfies the arithmetic relation R. And using the response, the two parties can agree on a shared secret key K for secure communication. In the attack scenario, the investor first generates the challenge for relation R as before. The attacker now generates challenge prime also for the same relation R. Then the attacker in some way sends the challenge prime to the traders. Now a suitable trader generates a valid response prime for the relation R using the challenge prime and returns it to the attacker. The attacker now in some way extracts a valid response for the relation R from the response prime received from the suitable trader. The attacker then sends the valid response back to the investor. The attacker in this way can agree on the key K with the investor and key K prime with the trader without the knowledge of a valid witness. Now the attacker can breach the connection between the investor and the trader, then learn their secret messages without being detected. You can find more details on the attack in the paper. To solve the dark pool's requirements and also to circumvent the man-in-the-middle attack, we introduce WitnessKey Agreement. It can be seen as a two-step version of witness encryption, where both parties agree on a key K if the trader knows the witness omega to an instant file of relation R. And then the investor can use the secret KK to encrypt the message sent to the trader. It can also be seen as a more powerful version of zero-knot proof, where the outcome is not just a binary upon the successful verification, but actually they can agree on a secret key K. In WitnessKey Agreement, we also define three algorithms: challenge, response, and derive for the investor and the traders to use in their dark pool operations. We require that WitnessKey Agreement satisfies 5 security properties: correctness, adaptive knowledge soundness, zero knowledge, as in zero-knot proof, and response and key indistinguishability, and security against man-in-the-middle attack as additional security properties. You can check out more details on them in the paper as well. To use WitnessKey Agreement in dark pools, we assume that the traders have independently committed some financial information file on the ledger. The investor then can run the K-challenge algorithm and publish on the ledger a challenge PC for the criteria R. Then each suitable trader runs K-response and publishes a valid response PR for the committed instant file that satisfies R. Finally, the investor runs K-derive to derive a shared secret key KC with each eligible trader using their valid response. The order information can be sent with the shared key KC. As such, only the trader that produces PR can decrypt with KR that is the same as KC. We construct WitnessKey Agreement based on the notion of non-interactive linear proof proposed by Groth in Eurocrypt 16. The main intuition for our construction of WitnessKey Agreement is as follows. In NUP, the proof pi consists of k elements. There are two algorithms that can produce pi that are proof and simulate as shown here. The proof algorithm requires the witness omega, but the simulate algorithm doesn't. Since the proof algorithm is run by the prover and the simulate algorithm is run by the verifier, on the prover's side, when the prover computes the proof, the first k-1 elements fully determine the last element of pi. On the verifier side, the verifier can use simulate and the first k-1 elements to compute the same last element as the prover. Then the last element can be used as a shared secret key between the prover and the verifier for secure communication. To construct witness key agreement, we first define the notion of split non-interactive linear proof based on gross non-interactive linear proof. In NUP, a proof is defined by a proof matrix pi. In split NUP, we simply split the proof pi into pi 1 and pi 2. So pi 1 now defines k-1 elements of the proof, and pi 2 defines the last proof element. We then adapt the designated verifier zk-SNARK approach that uses linear-only encryption scheme in our witness key agreement construction. So, as linear-only encryption scheme provides additive homomorphic property for its ciphertext, we can encrypt the common reference string of the NUP using the linear-only encryption scheme in the setup phase. Then the prover can compute the encrypted proof elements from the CRS and the proof matrix pi using the scalar multiplication and addition operations of the LE scheme. The verifier can then reconstruct the last encrypted proof element given the previous k-1 elements that the prover sent. For efficiency, we also adapt the NUP for quadratic arithmetic programs, which has only 3 proof elements, and the runtime is also linear with the quadratic arithmetic program size. Next, we need to instantiate the linear-only encryption scheme. To summarize, 5 algorithms are defined for the linear-only encryption scheme. 3 of them are standard for an encryption scheme, so the key generation, encryption, and the decryption algorithm. The other 2 are new. An LE scheme provides the add algorithm for the user to perform the affine evaluation of its ciphertext, and another algorithm called image verification that makes sure a new ciphertext can only be obtained by affine evaluation of the existing ciphertext with the add algorithm. To instantiate an LE scheme, we can use a variant of the Pauli encryption scheme tree. The first modification is whenever we encrypt a message M, we encrypt M and also theta M, where theta is a predefined constant. So an LE ciphertext now is actually a pair of Pauli ciphertext C of M and C prime of theta M. In the image verification, to verify whether an LE ciphertext is valid, we decrypt both the Pauli ciphertext and check that the linear relation involving theta still holds between the plaintext. Finally, in our LE scheme, as the encryption is only run by the verifier who knows the secret key gamma, we can actually pick the randomness for the encryption from Z gamma to avoid existing bias of the Pauli scheme tree. We can then estimate the theoretical performance of our witness key agreement scheme based on the number of Pauli encryptions, decryptions, and scalar multiplications. As we can see in the first table here, all the witness key agreement algorithms run in linear time with respect to the quadratic arithmetic program parameters. For practical evaluation, we estimate the runtime with 2 basic criteria: sufficient fund and price range, as shown in the table before, using the baseline Pauli performance by George et al. And the quadratic arithmetic program generated by LibSNARK. In both cases, the challenge phase requires around 6 seconds and the response phase requires around 8 seconds, which means each phase can be fit within a public blockchain generation time, such as Ethereum, which is 15 seconds. So, witness key agreement does not introduce extra overhead to a public blockchain system. For our simulation, we make use of the Bloomberg Trade Book for the period between March and May. which consists of 35 trading days in total. The trade book only contains the number of messages and the number of trades per day. Using WitnessKey Agreement, an investor can set up a secure conversation including multiple messages, which will lead to a trade. This means that the number of conversations, that is, the truly necessary WitnessKey Agreement executions, can be much smaller than the actual number of messages. These conversations can also happen in parallel if they belong to different trades. From the available data, however, we cannot know exactly which messages belong to the same conversation, or how many conversations are there, and the point of time at which they happen, as this is the whole point of the dark pool. We therefore consider the worst possible case, where each message is a conversation by itself, and they are executed sequentially, one after another, by a single trader. We also consider a more plausible scenario, where each trader is done by a different trader, and all messages of the day eventually belong to some trade. We ask one question here in our experiment. Can all messages of one trading day be processed in the same day? As if we were to run a day of trading messages, we would expect it to not take more than a day to actually exchange those messages. We also include one-way Tor delay of 1 second for each message in our experiment. As we can see in this figure here, even under the worst possible assumption, only 7 days out of 35 days require more than 1 day of sequential execution in our simulation. With a less extreme approach, which we consider parallel execution, the overhead is smaller than 10%, which is shown in the solid line here. Now, on limitations. Our WitnessKey Agreement scheme, as any scheme, inherits the limitations of its components, that is, the designated verifier zk-SNARK, compiled from a new for QAP. Firstly, zk-SNARKs are not known to satisfy composability, and therefore cannot be run out of the box in parallel in the design of a larger protocol. But it is okay here, in the basic dark pool scenario, as we only consider sequential composition, where each execution of WitnessKey Agreement between two parties concludes before the next execution begins. Users are also advised to run the share secret through a hash function modeled as a random oracle before using it as a key for any other crypto system. Secondly, our WitnessKey Agreement scheme makes use of QAP, hence it is only as efficient as the circuit expressing the constraints. Finally, we opted for simplicity, rather than making the WitnessKey Agreement scheme itself subversion resistant, as this would require the zero-knot property be maintained even when the common reference string is maliciously generated. So we consider only honest setup in our scenario. To summarize, in our paper, our aim is the development of a distributed dark pool. Notice that this is not yet another blockchain-based payment system, but this is actually about trading of contracts with arithmetic conditions. To do so, we introduce a new cryptographic primitive that we call WitnessKey Agreement, that is particularly suitable for private auctions in financial intermediation, in which one party wants to privately communicate with another party about committed financial information which satisfy an arithmetic relation R of interest. We then show how to construct WitnessKey Agreement based on Groth's non-interactive linear proof, and we define a new notion that is called split non-interactive linear proof that could be interesting for further new research as well. We illustrate the practical feasibility of our construction with some arithmetic circuits of practical interest by using the US dollar denominated corporate securities traded based on the Bloomberg Trade Book. For future work, It could be interesting to develop a more efficient construction of WitnessKey Agreement based on other techniques, so we can make WitnessKey Agreement composable and also subversion resistant. We could also look into other potential applications of WitnessKey Agreement, such as conditional biometric data sharing.